Hi, my name is Dinesh. Welcome to Dinesh Capital. In this video, we are going to see about Central Pivot Range or CPR Indicator. CPR Indicator is one of the oldest indicator in the stock market. That's why some of the top industry professionals and big institutions love Central Pivot Range. And it is personally one of my favorite indicators because I find it more logical and convincing. So if you're a regular trader, you normally used to see pre and post market reports from industry experts. How do they do it? They are using different data and information to arrive today's level. And the most important information they use is previous trading session, high, low and close. Central pivot range uses these exact levels to form the important levels for the current trading day. That's why CPR becomes very important. And CPR is such a big concept. We cannot cover everything in a single video. So I am planning to make it as a two-part video. In the first video, I'll talk about what is CPR, how it is calculated, what is the right CPR formula, what is the right indicator to use in the trading chart, and how to interpret the CPR levels to get the trading information like market sentiment, type of market day, those kind of information. And in the part 2, I'll be talking about CPR based trading strategies, setups, entry, exit and stop loss levels. I can straight away share you the CPR trading strategies, but if you don't know the basics right, you will not have the confidence in the live market because live market is such a high pressure situation. So always understand the basics right. If you understand the basics and the logic, you don't have to memorize anything. If you memorize anything, you will forget in the live market. So that's why I am making it as a 2 video. And this is my first video. If people like it, I'm planning to add more on the regular basis. And if you want to learn more trading topics or a different angle of what you already know, you can subscribe to the channel and click the bell icon for immediate updates. Let's get started. What is pivot? Pivot means a central point which the mechanism turns. It is a general term. It can be used in science, business, sports, automobile, etc. In this picture, we are seeing a bar placed on a triangle object. What do you think is the most important level in this particular bar? Obviously, it is this central point. If the load is more on the left side, the bar will go down here. If the load is more on the right side, it will go down here. That's why it's called pivot point. Let's apply this definition to the share market. Here, the mechanism is the price. So whenever the price comes near to the pivot level, the price may turn or something may happen. What happens is based on the weightage on the each side. Let's assume here there are buyers and here there are sellers. Currently the buying pressure is more. What if buying quantity reduces and the selling quantity increases? The price will cross the pivot level and it will go on the right side. This bar will come down. You can call it as a CPR breakout. Sometimes the price will come near to the pivot level and can stay for a long time because it has not decided which direction to go. Unless there is a big volume, either it is on this side or that side, the price will not get any direction. This is a very simple explanation to understand the importance of pivot level. There is a lot more to study and understand about central pivot range, its resistance and support levels. Trust me, it will be interesting. Let's go on to see what is CPR indicator. CPR stands for Central Pivot Range. It is also known as floor pivots and pivot point. Before the range was introduced, it was just a central pivot line with 3 support and 3 resistance levels. So totally 7 levels. In the beginning, it was called as floor pivots because it became popular when the traders on the floors of exchanges started using them. They used to stand on the floors and make the trade. If you had seen the Scam series, the story of Harshad Mehta, you will get an idea about how the stock exchange operated in the 90s period. We have evolved a lot from that, but still floor pivot works because of its logical calculation and ease of using it. The actual CPR indicator is floor pivot plus 4 more levels. After learning the CPR, you will not look at the chart the same way. You will have a different perspective towards the today's trading direction. Pivot point is kind of a median line of the previous time frame. So the general interpretation is, if the current day price is trading above the CPR, it is considered as bullish sentiment. If it is trading below the CPR, it is considered as the market is in the bearish sentiment. But this is just an overall view. To get a detailed view, we need to check few more details. Before seeing how CPR is calculated, let's check why pivot is used by top investors. I think why is always more important than what and how. Why pivot is used by top investors? What are all the advantages of using pivot? Pivot points are tailor-made for intraday trading because in the CPR formula, previous day high, low and close is used to calculate the current day pivot levels. Since it is applicable for only one trading day, it becomes very specific. So it is best suitable for intraday traders who use short time frames like 5, 10 and 15 minute time frames. Next important point is, it is fixed in all time frames. It does not change when you change the time frames. Sometimes a 5-minute and a 15-minute time frame gives a different signal in other indicators. Here we don't have that confusion. Once the pivot levels are fixed for at the end of the previous trading day, it won't change till the end of the current trading day. And the next important point is, pivot is a leading indicator. I don't know if you are familiar with the types of indicators in the share market. Generally, there are two major types. One is leading indicators and the other one is lagging indicators. Example for lagging indicators are moving average, MACD, Bollinger Bands, etc. Example for a leading indicator is RSI, stochastic and pivot. I'm not going to go detail about this topic because it may take a lot of time. I'll create a separate video in future. I think just knowing the major difference will be enough. A leading indicator like pivot can predict the market movement in advance, but the lagging indicators gives a delayed signal, which means when the signal comes, the movement would have already happened, and hence the name is lagging. So in trading, we always want to predict the movement in advance. So this works very well. Next is knowing when to exit. This is one of the biggest problems in trading I personally faced. I have seen many other traders also complain about their exit problem because it's never easy to decide when to exit a particular trade. Most traders exit too early and feel bad about it, or stay too long and suffer big losses they could have avoided. So the ability to know when to exit a particular trade is one of the most important skills of an intraday trader. This is where pivot points can be very helpful. It will give you a clear entry, exit and stop loss levels. Pivot levels are used by big institutions. Big means big domestic and international investors who has lot of money. When they enter the market with big volume, they can give direction to the market. They can either push the price to the same in the same direction or can change the direction completely. When we are in the direction of the big players, whether it is going up or going down, we have a higher probability of winning trades. Pivot helps us to do that. How floor pivot is calculated? The concept of pivot is there for many decades. So there are different variations of the formula. The one we have shown here is considered as the standard floor pivot formula and is used by most of the top traders and big institutions. It is based on previous time frame high, low and close, which means when it comes to day trading, we need the previous day highest price, lowest price and the closing price. Based on this data, we can add the 7 pivot levels in the chart as shown in the slide. We have 3 support levels and 3 resistance levels. I guess you know the difference between the support and the resistance. As the name says, whenever the price comes near support level, it takes support and then goes up. Same way, whenever the price goes near to the resistance level, it faces resistance and then come down. Why these levels work? Yesterday's trading value plays a very important role in today's trading. Let's assume yesterday the market opened around here, went all the way up, touched the R2 level and then come all the way down, touched the S2 level and then finally closed somewhere around here. So this is the highest price, this is the lowest price, this is the closing price of the previous day. The highest price tells us about the most bullish sentiment for the day, which means the market participants who want to push the price up, they cannot able to cross this level. The sellers came in and pushed the price down. In the same way, the lowest price tells us about the most bearish sentiment for the day, which means the buyers who want to push the price down cannot able to break this level. The buyers came in and pushed the price above. And finally, the closing price of the day tells us about the collective mindset on this particular day. The bullish and the bearish fought for the fair price and ended up at this level at the end of the trading day. So this level is also very important for the next trading day. Let's see how to calculate these levels. First, we calculate pivot point by adding previous day high, previous day low and previous day close and divide it by 3. And then we go on to calculate 6 other levels by using pivot point data and other datas. We don't have to manually do any of this calculation, just understanding is enough. But in those days, people had to draw each level on the charts manually. It would have been a very difficult process, but one advantage is when you learn it in the harder way, like the old times with pen and paper, you won't forget it. But for us, everything is available in few clicks. Maybe that's why we cannot remember anything. If you have read a good stock market books, you would have probably seen at least one quotation from Jesse Livermore. He was considered as a Wall Street legend. His name is Jesse Livermore. He was considered as a Wall Street legend and he has influenced generations of stock traders. But you know how he started? He started as a board boy in a brokerage around 1890s. His job was to write daily share prices onto a blackboard from the exchange recording. He got curious about the price changes, like when a big move happened in the market, be it up or down. He could recall exactly how the prices had moved the day before. This had helped him to become a great trader in the later years. So, whatever stock or index you are following now, keep a diary and write the open price, highest price, lowest price, closing price of the stock. This will help you in the long run. It's like learning maths in school times. Even if you understand the concept, if you don't write it down, you will forget it completely. So learn it in the harder way if you don't want to forget it. What I have explained is just standard floor pivot levels. We are not going to use this on the chart. The one we are going to use is the central pivot range and expanded pivot formula. It is nothing complicated. It has just 4 more levels. So this is the actual CPR formula. Top and bottom central pivot is calculated using these formulas. First you calculate bottom central pivot using previous day high and low, and based on that you calculate top central pivot. Sometimes top central pivot will be in the this top central pivot will be in the bottom, this will be at the top. So don't confuse yourself. Whatever the level above central pivot line is top central pivot, whatever the level below bottom central pivot, below the central pivot line is called bottom central pivot. Hope you can understand this. I'm not going in detail. And here we have R4. R4 is derived from all the three resistance levels, and S4 is derived from all the three support levels. Let's not further worry about the formula and add the CPR indicator in TradingView. We are going to see how to set up CPR indicator in TradingView. I hope you are all using TradingView already. If you are not using it, I would strongly recommend to use this one. Most trading apps have inbuilt chart setup, but the features are very limited. I normally use trading application just to place the order, and most of my analysis is done in TradingView and some other tools. To add the CPR indicator in TradingView, go to the top menu and click on Indicators. In the search bar, type CPR. There are so many indicators in TradingView because anyone can develop the indicator and add it in the public library. You can find it all in the community scripts. You can use any of these indicators. Normally it is better to use the indicator that is used by many people. You can see the number of people using the indicator, the number here, and here is the developer name. But make sure the levels are based on the formula we have given in the previous slides. I keep trying new indicators based on my convenience. Currently I am using this one, CPR with pivot levels, CPR by KGS. The developer is Gomadi Shankar. Just click on the text to add the indicator on the chart and close it. The chart looks very cluttered with so many colors and lines. Don't worry, let's disable some of the unwanted levels first. To do that, go to the indicator settings. See, here's the eye icon, next is the indicator settings icon. Click here. Here you have three tabs: inputs, style and visibility. Go to inputs. We want daily pivots, weekly pivots and monthly pivots. So just enable those levels and disable all the other levels. And next, go to style. So you have so many list of levels here. Let's choose whatever we want. We want all daily pivots level, which means including R1 to R4 and S1 to S4. So we are not going to disable this. Tomorrow pivot we will disable. Weekly pivot we are going to keep, but we are going to disable weekly resistance and support levels. Monthly central pivot we are going to keep. Monthly support and resistance levels we are going to disable. I think this is enough for us, and then click OK. Next, let us change the color. You can change the color, same settings icon. You can change the color as you wish, and you can change it whenever you want. So try with different colors that is comfortable for you. And here is the level design. So here you have so many options to choose from. I normally use circles for central pivot level, and for daily resistance and support levels I use cross. Okay, I use my own colors. Let me show you what colors I use. I use the combination of orange and blue colors for daily pivot levels. I use the same light blue color for daily resistance and daily support levels, because whatever is above central pivot range, it is called as resistance. Whatever is below CPR is called as support, and I felt there is no need to differentiate it. And I use default green color for weekly pivot levels and red color for monthly pivot level. And for top and bottom central pivot, I just reduce the opacity to 65%. So when you reduce the opacity, the color will be more transparent, and the type will be circle. And only for daily support and resistance I use the cross type levels. When you add the colors you like, you can see the charts for a longer time without straining your eyes. I have shared the colors I'm using in my indicator here. You can try it if you like it. To change the color, go to the settings. You can see under the style, you can see all the colors. Daily pivot, we can choose the colors as we have decided before. Here it is opacity. If you change it, if you reduce the opacity, it will become more transparent. And here is the thickness of the level. You can change it as you want. I have changed all the colors and updated it. As you can see, after applying those colors, the chart looks something like this. Previously it was like this. I think it looks a lot better, and then we can clearly see what is daily pivot and weekly and monthly pivot levels, and we can also see the price clearly. And I use a red color for bearish candlestick and blue color for bullish candlestick. In the later chapters, we'll learn about how to compare CPR levels and how to see CPR width. That time we don't need daily support and resistance levels and weekly and monthly CPR levels. We will hide those levels. So let me teach now itself so that it will be easy for you. You can go to the settings icon again. You just have to disable those support and resistance levels and weekly and monthly pivot levels, and click OK. It will be done. Those levels will be gone. And if you want to hide the price also, you have to click here. You see the eye icon, you hide the price, you minimize the chart. You can clearly see how the CPR is forming for many days. See, it's very simple. Next, let's move on to advantages of using CPR. Advantages of using CPR indicator. The main advantage of using CPR indicator is it will help us to find many valuable information about the next trading day. Based on the CPR level, we can make some prediction about the next trading day. It will help us to find type of market day, market sentiment, and unknown market levels. Let's see how to use CPR indicator to find this information. First, we'll see type of market day. As soon as the previous trading session ended, we can able to see the levels of the next day CPR. These central pivot range levels can give us signal in advance about the type of market we can expect on the next day. There are different type of market days. People have named it in different ways, but there are two main types of days I really care about, and even a beginner can easily identify. Those are trending days and ranging or sideways days. I hope everyone knows the difference between trending days and ranging days. In a trending day, the market continuously moves in the same direction for the entire day, like you see in the chart. There may be some minor retracement like you see here, but the closing price will normally be in the day's high. If it is a bullish trending day, it will be in the day's low if it is a bearish trending day. Like you see here, it is going up, but there is a minor correction. But here it is going down, but there is a minor correction or pullback. It's called retracement in trading. It means a small pullback from the original direction. You should know to differentiate between retracement and reversal. If you confuse retracement with reversal, you will see a big loss on that day. If you could able to identify this kind of trending days in advance, trust me, you can be in the small percentage of successful traders in India. Second type is called ranging day or range bound day or sideways day. All represents the same kind of day. The range may form in the first big candle like this, or it may form in the first hour like this. The range that forms in the first hour is called initial balance. On these days, mostly the market will quietly trade on the upper and lower boundaries throughout the day. As the price is trapped between this range, it is called as range bound or ranging day. And as the price goes in the sideways like this, it's called sideways day. If the range is very big, it is difficult to break the boundaries. But if the initial range is small like this, you can expect a breakout opportunity. But these days you have to be very careful about the false breakouts. It is safe to take reversal in the upper and the lower boundaries. Sometimes there will be huge gap like you see here. It may be gap up or gap down. It may happen due to some financial or political news or US market conditions. When this huge gap up or gap down happens, the market will mostly trade in a small range like this, because the news will impact the next day market with the price moving up or down. But since there was a big move happened in the opening itself, there won't be a big move afterwards. We will not get good entry opportunities in this kind of trade. Days with big gap up or big gap down are kind of different from other days. You should analyze well before entering the trade. So knowing the type of trading day is very important in deciding our profit or loss for the current day. Let's see how CPR helps to find the type of trading day we are in. CPR width. When we are saying CPR width, we don't consider resistance levels R1 to R4 or support levels S1 to S4. We only take central pivot range into count, which means we only take the difference between top central pivot and bottom central pivot. Based on the width, we can say there are three types of CPR: narrow CPR, wide CPR, and medium or normal CPR. What is narrow CPR? When central pivot line, top central pivot and bottom central pivot are very close to each other, it is called as narrow CPR. If it is very wide, it is called as wide CPR. If you cannot decide if it is narrow or wide, you can assume it as a medium or normal CPR. We don't have specific measures to say like this many points is wide or this many points is narrow. We just decide based on blind sight. I normally just minimize the chart and compare the current day central pivot range with at least last 10 to 15 days pivot range. Surely you can find the difference in this method. Let's see an example on the chart. We are seeing the Bank Nifty chart of July 22. I have hidden the price movement, resistance and support levels so that you can clearly see the difference. As you can see, these two are narrow CPRs. This can be said as a wide CPR. This can also be said as a narrow CPR. Other CPRs we cannot decide if it is wide or narrow, so we can put it in the normal or medium bucket. So this is the best way to see the CPR width clearly. If you have other resistance and support levels and price, you cannot decide if the CPR width is wide, narrow or medium. You can also try this method. Next, let's see how to analyze the CPR width. We'll see narrow CPR first. Most trading days happen when there is an extremely narrow CPR. Generally, we assume CPR levels are very important and something will happen at this level. But when this pivot range is narrow, these levels are mostly weak. It will not work as a good support or resistance level. So the price can easily break this level. So there is a good breakout opportunity. Once this level is broken, many traders will enter the trade and push the price in the same direction. This will create a good trending day. Wide CPR, on the other hand, is just opposite to that. When there is a wide CPR, the market will mostly be range bound. It will quietly trade in sideways throughout the day because the wide pivot range levels act as a very strong support and resistance. It will not be easy to break that level unless there is a big volume. Traders will look to take reversal trades at the end of range boundaries. So there is less chances of breakout opportunity. And one more thing to notice, the reason why wide CPR creates sideways day is because these levels are hard to break through. Let's say there was a gap up or gap down on a particular day and the price went beyond those wide CPR. It means the market mood has changed overnight. In the situation, we cannot expect the market to be range bound. Anything can happen. Even a big trending day is also possible. You have to be very careful whenever there is gap up or gap down situation in the market. Next comes the medium CPR. This is the confusing one. When you compare it with the nearby pivots, if you can't decide if it is wide or narrow, you can call it as medium CPR. We have to keep our eyes open on this day. We make no strong assumptions on this particular day because anything can happen on this type of trading day. It can be a big trending day or a quite ranging day. Just wait for other signals to confirm the type of day. You can get a good breakout opportunity on important levels, but beginners, keep your position size small to avoid big losses. Let's see an example in a chart. We are looking at the chart of HDFC Bank on June 2022. On 14th of June, the stock traded within a small range throughout the day without big movement. This led to a narrow pivot range on the next day. But the next day also, there was no big movement. The price touched the CPR and then reversed. This created an extremely narrow pivot on the 16th of June. It also signaled as a big breakout opportunity. Note these levels clearly. On these days, the price cannot able to break the top central pivot level. But on the 16th, it broke the extremely narrow pivot range so easily and closed at the day's low. The very next day, on the 17th, we can see the wide CPR. As the wide CPR levels are strong, the stock tried to break the bottom central pivot level 2 times, one in the morning and one in the afternoon, but failed to do it. But it broke the level at the end of the trading day and closed within the central pivot range. This is how we have to analyze pivot width. See, pivot width analysis is very effective when there is a clear difference between wide and narrow pivots. So, if the pivot is unusually wide or unusually narrow, our prediction has a higher probability of success. And always know that everything is a prediction in the stock market. Just like every other technical, it may not work every time, but we can use it as a guideline. Next, we look at the market sentiment. Every trader should enter the market with some kind of analysis or theory about today's market condition. Like it's going to be bullish, or it's going to be bearish, or neutral, or highly bullish, something like that. And at the end of the day, the market will confirm your analysis or reject your analysis. Either way, it is good. If you are right, you will have the profit. If you are wrong, you will have your lesson. Trust me, the lessons are more valuable than profit in day trading because it is not just about one day. You are going to trade for the rest of your life. All the big traders and share market experts are the people who booked loss more than we ever placed orders. But the important thing is, we should not blow up our capital. If there is no capital, we can't play the game. So don't have the FOMO. FOMO is the term used by marketing people. FOMO means fear of missing out. It's like Amazon or Flipkart offers. The offer is ending soon, it's now or never. They will create some kind of urgency to make our purchase decision. Like the same way, some market conditions will also call you to make the trade, even though when you are not sure. If you are not sure, don't take it. There will always be a next trading day. Our goal is to stay in the share market as long as possible by making as much as money we want. So that's why I say don't worry if market rejects your theory. But going without theory is very, very dangerous because you will learn nothing even after if you trade for years. In making the today's market analysis, finding the overall market sentiment for the day is the first information we need to look for. We can do it with the help of comparing CPR. We have to do 3 types of CPR analysis to create a market theory for the current trading day. We have to consider all these 3 before placing an order. First is current day sentiment, next is recent trend analysis, and the last one is long-term sentiment. We are going to do this analysis by CPR comparison. We are going to find the current day market sentiment by using CPR comparison. So when we compare 2-day CPR, we have this many possibilities are there: above, below, overlapping above, overlapping below, same level, outside and inside. Some of these comparisons not only tells us about the market sentiment, it can also tell you about the type of market day. Let's look at this one by one. Here we have 2 situations. One is above or higher value, or below, or second one is below or lower value. So we are going to compare 2-day CPR, the previous day CPR with the current day CPR. So as you see, this is the top central pivot and this is the bottom central pivot. The same applies to all these central pivot ranges. So in this above situation, the current day CPR is above the previous day CPR, which means the current day bottom central pivot is higher than previous day top central pivot. In the situation, as it is a higher value, we have a bullish sentiment. Next we have a below situation, below or lower situation. Here the current day CPR is lower than the previous day CPR, which means current day top central pivot is lower than previous day bottom central pivot. In this situation, we have a bearish sentiment for the day. The sentiment can change overnight based on the news or some US market conditions. Only the current day open will tells us which way it is going to be. As you know, we know this information by the end of the previous trading day. It is a major advantage. Next type is overlapping position. In this, some part of the current day CPR is overlapping with the previous day CPR. It is in the same level as previous day CPR, but it is extending slightly above, which means we have a bullish sentiment, but it is not strong enough like a above or higher value. Here today's top central pivot is higher than previous day top central pivot, but today's bottom central pivot is lower than previous day top central pivot. Next is overlapping below. Just like that, the current day CPR, some part of the current day CPR is in the same range as previous day CPR, but is extending slightly below. The bottom central pivot of the current day is lower than the previous day bottom central pivot, but the top central pivot is higher than previous day bottom central pivot. In this situation, we have a slightly bearish sentiment, but the sentiment is not strong enough. Next is same level. Sometimes the 2-day CPR will be on the same level, not exactly with the same values, but when seeing visually, overlapping with the width will be almost the same and it will be kind of overlapping. It looks like a same level. It's a very rare situation, but can be very interesting. Most probably you can expect the price to move in the same range as the previous days, because it means the market has accepted the current price as a fair value. But it also means that there is a big breakout opportunity, because big investors won't let the price to stay in the same range for many days. When the price breaks the yesterday range, if the yesterday range is like this, when it breaks the yesterday range, we have a big breakout opportunity. If it doesn't break the level, we can take reversal trades from the boundaries, but it is better to keep the position size small. Next is inside and outside level. This kind of pivot levels can tell us about the market sentiment and the type of the day, because in these 2 types we are not only comparing the 2-day pivots, the pivot width also comes into play. Here it is more wide, here it is narrow. Outside level happens when the today's CPR completely engulfs the previous day CPR. It is just like the engulfing candlestick pattern. It means the CPR width is more, so probably we can expect a quite sideways day. I think we have already discussed a lot about CPR width, so I'm not going in detail. Next is inside level. Inside level is just opposite to the outside level. It means the today's CPR is narrower than yesterday and also falls within the previous day CPR value. It means the range is shrinking, which may lead to a good trending day if the breakout happens. Inside level is very important, like narrow CPR levels, as it is not only narrow but it's also inside the previous day range. We can expect a good breakout rate when it breaks the boundaries. We have seen how to analyze the current day market sentiment by comparing 2-day CPR values. But it is not just the previous day levels that affect the current day CPR. There are many other factors. One important factor is the recent trend. We can identify the recent trend by looking at CPR levels for multiple days. We are seeing the daily CPR comparison for many days. This is day 1, 2, 3 and 4, 5. If the daily CPR is going up continuously, the market is in a bullish trend. It's called as ascending CPR, as it is continuously going up. If the daily CPR is going down continuously, it is called as descending CPR. Descending CPR tells us about the bearish trend. And imagine you are here on this particular day, you compare the 2-day CPR and come to the conclusion it is above or higher value. So you have a bullish sentiment. What do you normally do? You will probably try to take long position when there is a dip. But the truth is, you are standing on the end of a big trend. You will trigger the order for the long position here. Immediately the market turns the direction and starts going down. But you will be still hoping the market will come back to this level. But it won't easily come back because no one knows that. If there was no stop loss, you will never forget this day for the rest of your life. So whenever there is many days ascending or descending CPR, you have to be very careful, because market will not move in the same direction for many days. The trend can shift at any time and the market can prove us wrong. So always have an exit plan when entering the trade when there is a continuous trend for multiple days, like 3 days, 4 days, 5 days, like that. Next we'll see how to analyze the long-term sentiment. Why see long-term sentiment? Most intraday traders don't look at the big picture. This is where they are making the mistake. If you're a scalper, you don't have to worry about long-term sentiment, because the momentum and the timing is all that matters when scalping. But if you're an intraday trader who would like to hold your position for hours till your target is reached, you should care about long-term sentiment, because the more time you hold, the more risk it is. Because the market is not only run by intraday traders. There are swing players, positional investors. They will use long time frames while investing. Analyzing long-term sentiment can help us to understand the overall market conditions. It's like a bird's eye view from a distance to see what is happening in the market. Daily CPR can tell us about the market sentiment of the previous day. Ascending and descending CPR can tell us about the recent trend. And how to find the long-term sentiment? Simple, same kind of approach, just by seeing weekly and monthly CPR levels. Let's see how to use weekly and monthly CPR levels. Previously we compared daily CPR levels. Now we are going to see the position of current price in relation to long time frame CPR levels. If the price is above monthly CPR, we have a bullish assumption. If it is below monthly CPR, we have a bearish assumption for the month. Same applies to weekly CPR also. If the price is above weekly CPR, we have a bullish assumption for the week. If it is below weekly CPR, we have bearish assumption for the week. In bullish market, we try to buy on the lows, and in bearish market we try to sell on the highs. And don't worry about resistance and support levels in long time frame CPR levels. It will not have a big impact on the market. We combine the monthly and weekly CPR levels to form the long-term sentiment for the current day. Here we have two situations where here's the price. It is above monthly CPR and above weekly CPR. So the sentiment is bullish. In the same way, the price is below weekly CPR and below monthly CPR. So we have a bearish sentiment for the current day. But when you get mixed signals like this, you have to be more careful. In the first one, the price is below monthly CPR and above weekly CPR. This is a moderately bullish sentiment because we value weekly CPR more than monthly CPR. The reason is we always give more weightage to the recent time frame CPR than long time frame CPR, which means daily CPR is more important than weekly CPR. Weekly CPR is more important than monthly CPR. In the next example, the price is above monthly CPR but below weekly CPR. So we have a moderately bearish sentiment. The logic is the same. And whenever there is mixed signal like this, don't stay in the trade for a long time. Scalping trade is the best in these situations to minimize the risk. When the price is inside weekly or daily CPR, it is better to avoid the trade till the price comes out of central pivot range. Having too many CPR levels on the chart may be confusing for some new traders. So if you want to hide one of the CPR level, which one to hide? Obviously monthly CPR level, because we give more importance to the recent one. But just see the monthly CPR level in the beginning of the month. If the price is far from that level, you don't have to worry about it much. But if it is very near, it will have an impact on the price. When you have multiple checkpoints, you won't lose your money. The problem of having too many conditions will reduce our trading opportunity, but our winning percentage will be more. As you trade regularly, you will naturally fine-tune your setups. You will learn to trade even though your setup is not proper, because you would have learned how to manage the risk even if something goes wrong. Next, we are moving to unknown CPR levels. Sometimes we wonder why the market is turning at this level. Even pivot-based traders forget to notice these two important levels. The reason is because traders are overloaded with too much of informations, indicators and levels. And because of that, they may miss some important levels. It's hard to see all the levels within seconds before entering the trade. That's why you need to mark all these important levels before the market opens. Because once the market opens, you cannot even remember your close friend's name. So what are those levels? When it comes to CPR, there are two important levels. One is virgin CPR levels and the other one is long time frame CPR levels or multi-time frame CPR levels. There are other important demand and supply zones, but since this is just about central pivot range, we will look only at these two levels. First, let's look at virgin CPR level. So what is virgin CPR? The name itself says it all. Virgin CPR means that the price did not touch the central pivot for the whole trading day. This level is important as it is believed that the market will respond to such virgin CPR levels in the upcoming sessions. Assume we have a trading situation like this on yesterday. I haven't marked the current day CPR levels. This is the yesterday CPR level. This is here supposed to be a current day CPR level. But I haven't marked it because it doesn't matter whether it is up or down. Here in this we have two examples. One is on yesterday it traded above CPR or below CPR. But for the whole trading day, the market has not touched the CPR level. This kind of CPR is called virgin CPR. If the previous day is traded like this or this, what you have to do is you have to extend this level for the current trading day also. Normally we don't care about previous day CPR levels, but we do have to care about it if it is a virgin CPR or untouched CPR like this. because virgin CPR can act as a good support and resistance level. If the price come above, it will face some kind of support like this and then reverse. If the price approach this level from below, it will face some kind of resistance at this level and we have a chances of reversal. So whenever there is virgin CPR nearby, you should avoid taking big breakout opportunities like this, because there is always a chances of reversal at this virgin CPR level. And also whenever virgin CPR comes in between your entry and the target, let's say this is your entry and this is your target, virgin CPR comes in between this, it is better to close half of your position to minimize your risk. If it is not tested in the current day, extend this level for the upcoming days also, because the market will remember this level at least for a week. Let's look at an example in a chart. We are looking at the chart of TCS on 7th and 8th of July 2022. On 7th July, the price did not touch the CPR level for the whole trading day. So we have a virgin CPR situation here. We have to extend this level to the current day chart like this, like I have done here, because this is also an important level if the price comes near to it. As expected, the price touched the virgin CPR level and reversed from that level. I have enabled the S1 and S2 level so that you can understand there is nothing in between. Let's say the price did not come to this level, but the market moved up for the next few days. You don't have to worry about this level after a week. And once the virgin CPR level is broken and closed below, it can no longer act as a strong support or resistance. Let's say the virgin CPR level is broken in the morning like this. You don't have to worry about it much when the price comes near to it in the afternoon. So this is how we have to use virgin CPR levels. Long time frame CPR levels. Most intraday traders do not worry about the other time frame CPR levels. But just like daily CPR levels, weekly and monthly CPR levels are also very important. As the pivot is there for many decades, it is one of the favorite indicator used by big investors and institutions. They are waiting on different price levels and their position size and volume are very high compared to the day traders. Because of that, they will not simply allow the market to break through certain levels easily. They will fight hard to keep their profits or to avoid losses. So we have to mark these levels in our chart and be ready when the price come near this level. And as we have seen already, there are two important long time frame CPR levels. One is weekly CPR levels and next one is monthly CPR levels. Let us look at a chart to understand this. We are looking at the HDFC Bank chart of July 2022. This is daily support, one daily CPR support level 1 and this is daily CPR support level 2. The light green is the top central pivot of the weekly CPR. The dark green is the central pivot line of the weekly CPR. Normally when the price retests this S1 level, we take a short trade with the target to S2. But in between there is a weekly CPR level. Here the price tested top central pivot in the weekly time frame multiple times, 1, 2, almost 3 times and reverse from there. If it has to break this particular weekly CPR level, it needs more strength and momentum. As the momentum is not there, the price faced reversal and then went upside. So reversal happened instead of a breakout. But on the next day, it broke the weekly CPR level with full conviction. If we had not marked this level, you would have taken short position here. Your stop loss would have hit because you would have obviously placed stop loss above the S1 position. That's why whenever the price is approaching weekly CPR levels, just take a scalping trade or make weekly CPR level as your target and exit your position. See, even on the next day, the price broke weekly top central pivot level. There was a small pullback. It retested weekly top central pivot level. Many sellers entered the market, pushed the price down and broke the weekly CPR level. See how exactly these levels work. Next, let's see an example on monthly CPR level. We are looking at the same HDFC Bank chart of July. I have enabled both the weekly and daily pivot levels. The green color is weekly CPR levels, the orange color is daily CPR levels, and the red one is monthly CPR levels. Take a close look at 18th and 19th July. Market was in the downtrend for the past 6 to 7 days. As the price arrived at this level, it faced a strong support, but there is no daily or weekly CPR levels here. Even though there is some daily S1 or S2 or S3 is possible, it is not strong enough to break the 6 or 7 days trend. Just like I said before, you have to be careful when the price comes near to the long time frame levels. It came very near on, I think it's 15th of July. So you should mark this level in unique color so that you won't miss it on the next day. Let's take a closer look on the next slide. In this slide, we are seeing only 18th and 19th July chart, so that to see what happens exactly. Imagine you haven't drawn this level. You will try to take the advantage of the big CPR breakout opportunity. What will happen? Daily CPR was broken and these two red candles shows about the strong bearish trend. So you will try to take short position at the end of the first big candle. But the price touched the monthly CPR and reversed. See how many times the price touched the top monthly central pivot level and reversed right from there. That's why you need to mark long time frame CPR levels in your chart. Finally, we have come to the end. I hope now you have some understanding about the CPR levels now. I know it's quite a long list of topics, but each of these topics can be discussed in detail if I explain you with multiple chart examples. But the video will become very lengthy. So if I get time, I'll add separate videos for each topics with multiple examples in the future. And always remember, these are all just assumptions. Don't blindly trade based on this. In the part 2 video, we'll discuss about CPR strategies, CPR trading setups, like when to take reversal, when to take breakout, when not to trade with CPR, where to place your entry, exit and stop loss level, how much position size to use, how much capital to deploy in one particular trade, what is the best risk reward ratio, and many more things. I never thought making videos so difficult until I started this. It takes a lot of time and commitment. Now I have more respect for all the YouTubers out there. They are really doing a great job. But in a way, I kind of enjoyed it because I relearned a lot about CPR while trying to teach. So if you don't want to forget the concept, just call your trading friend or your family member and explain the concept, because teaching is like 10 times learning. The more you share, the more you can learn. And thanks for your valuable time. If you find the video was helpful to you, you can like the video and subscribe to the channel. And if you have any comments or suggestions, you can post it in the comment section. It will help me to make better videos in the future. And thanks for your time. I'll see you guys in the next video.